Good afternoon, everybody. Welcome to your TraderMerlin show. It is your Wednesday edition. It's a trading Q&A day today. I have, as you saw there, it looks like Big Eb was confused as week-long break. Yes, I wrote in the description week-long break because next week I'm actually back in a classroom teaching at Online Trading Academy next week. So I'm pretty excited about that. Good to get back in a classroom. I love being in physical classrooms. Teaching this stuff's great and, interacting with you guys on a daily basis, but I can't see your faces. I can't interact with you. I can't see whether you're sleeping, bored, annoyed. Being in front of a live classroom is very exciting. So looking forward to that. That should be fun. So all next week, I'll be in a classroom during this show and I won't be able to do a show. So you're going to have 1 week of total break for me. Thanks, Manatee. I try to cut through the BS. Definitely. As long as I've been doing this, I've been fed so much BS from professionals, from media. Just cut through all that crap and makes it much easier for you. So I'm going to go through our markets real quick, give you my perspective. I did not exit my short position today. I almost pulled the trigger, and I think I'm going to end up regretting that. I'll probably close it tomorrow, but I'll show you about that one, and then I'll dive into about 6 or 8 different questions that came in. For those of you who might be new here, you can always send in questions at TraderMerlin@gmail.com or put them down below any of the YouTube videos. Almost all of the questions from today's show were from one of the YouTube videos I've done in the past. So whenever you put them in, any video comment is fine because it puts them in chronological order when I receive them on my dashboard. So there we go. Merlin, the Seahawks will be... Get out of here, Medic. There's no way the Seahawks are going to beat the Niners. Niners are... No way. This weekend will be a great game, I will say. The Dallas Cowboys versus the 49ers. But anyway, we won't make this a sports show. Let's dive right in so I can kind of get through all this stuff. We had some pretty big movers today. Crude oil being that main one. Now, this surprised me as well because we've had this line drawn here at 87.38, where I thought we'd actually stop, pause, maybe have a bounce back to the upside. Interestingly, today, we not only broke it, but we ripped through it like incredibly fast. Big down move there for crude oil. A lot of this coming on the heels of people citing inventories, that all of a sudden we're starting to see inventories go back up here in the U.S., which is a good thing. It'd be nice to get a little bit of a buffer, but crude oil ripped down below that. And for any technicians out there, you kind of got to look here and go, where are we going? Right? Where is it going to go to? Well, hate to say it, but $79 looks like a pretty nice ripe target because I don't see anything really here between August 24th and September 7th that looks like any sort of demand zone. So yeah, it looks like 79 is our next logical target. That will definitely help out your equity markets if we get that down to $79 there on crude oil. So that was your worst performer on the day. The 10-year just rolled into the new session. It actually was down on the day. I'll give you the exact percentage here in just a second when I get my drawing tools up and running. Over the last 24 hours, you saw that 10-year drop about 1.31%. Good. Need a little bit of a reprieve, right? This is, for me, one of the more important factors for this market going forward. And, I talked about the 30-year fixed rate mortgage and what the probability of that is going forward, that we might see that much higher. So I actually posted this on Twitter, did a poll for you guys, and you commented, some of you did, a very light turnout. I was really kind of surprised it's a light turnout. Only 32 people voted on this one. But anyway, 59% of the people that voted on this one said that we will see 9% rates on that 30-year fixed rate mortgage this year. 40% saying, no, not going to see it. And, I guess the question would be, where are we at right now? Well, here is a chart I grabbed a couple days ago. This is from the Kobayashi letter. And you can see just the incredible surge you've had up. Just going back into December of, was this back to 2020? Yeah, wait a minute. I got my years wrong here, but this is showing 1 year of trading activity. So we were at 6.31 back in January, and now we're at 7.83, and this is actually not even current. Here is right now as we speak. And this is, of course, for those people who have an 800 plus credit score. So if you're down in the 720, 730s, you're probably already in that 8% bracket. You can see the top one there, 30-year fixed rate mortgage, 7.959 as of right now, October 3rd, excuse me. So if you're at 720, which I say is a great credit score, you're still at 8.4%. So we'll see. I'm in the camp that thinks we will see this break above 9% by the end of the year, but time will tell. And of course, if we do see that, that's certainly more pressure to the downside on the account. Lee says, I could not vote because I deleted my Twitter account. All right, well, it's okay. I appreciate it. You show enough support, Lisa, for me in the program and the community here. So there we go. What else are we going to get into? So that was your the 30-year fixed rate mortgage to go based off that 10-year, which we saw drop out 1.3% today. Moving up that list, you've got gold, which continues its slide. I still think that 1820 mark is going to be in play here. And silver also was down earlier today, but actually started to bounce back up a little bit, which was kind of encouraging for me. As you know, I sold some more puts on silver at that $19 strike price expiring October 20th. So I've got another couple weeks left, but SLV actually has a hammer formation today, which is great. We did hit $19 today. We actually broke to $18.97 and then ripped up. I was not assigned, so whoever bought those put options from me did not assign the shares to me yet, which is fine. I'd be happy to own it at 19. I think we'll be okay. So there's your gold. Dollar index down slightly. Now, I don't remember if I brought this up yesterday. I think we did. Yeah, we did, because I put this line on here and I said, if we open up above 107 and start to drift down lower, which we did, there's your short opportunity once it broke that 107 mark, and lo and behold, it did, and made for a great short opportunity on the dollar index, actually long opportunity on the markets once they started trending to the upside. And we'll look at those markets starting right now. Now, here's your Russell 2000. This is the one that has me nervous. The reason I'm nervous on this one is it actually is, it's not a hammer formation per se. You guys can see this last candle here, but it is somewhat bullish. At one point, it was significantly down, rallied back up, had a nice little green body for a while, and then ultimately closing just barely down 0.12% for those futures markets. Now, this is a hammer formation, in my opinion, because we've had this 2-day drop here, which has been pretty, or 3-day drop, which has been pretty aggressive. Therefore, I am anticipating this rallying up tomorrow. Now, what I hope happens is, as we get in the after-hour session, it starts to drift lower, the Asian markets go lower, and that pulls the Russell down, and then I'm faced with the dilemma of getting out at 1650, which is my original target on this one. Now, we did drop to a pretty significant low today on the Russell. Our intraday low is 1720, so that's about 70 points away from my ultimate target, which is the bottom end of this giant yellow zone we have here. But I'm going to be pretty critical on this one because I only have 3 weeks left until my options, or until my deadline to get out of those options is. Yeah, a Dragonfly Doji would look more like the letter T, right? A Dragonfly Doji would be right near the top. Would you consider closing some of your position? Yes, Lisa, I'm on the fence right now. I want to see what happens tomorrow. As I told you, I had 80 puts open. I closed 40 already. And of course, in hindsight, it's like, oh man, if I just kept those extra 40, it would have been a much bigger gain. No reason for me to think that, right? No reason to be greedy. So I did close out half of my put position, so I'm now in 40 puts. I may just go down to 20 tomorrow just to lighten the load a little bit more, because it just feels like it's getting a little bit overdone here. And there is some relatively positive economic data that is circling, and that data may be some of the catalyst for this market going forward. Off the top of my head, I'm trying to remember, you had ISM manufacturing numbers were the highest it's been since 1 year, right? So we've seen the highest in a year. We got consumption running about 8.1% annualized over the past 2 months, so that's good. You've got 4-week initial claims, the lowest since February. I made a little notes to myself over here. You've got core PCE, its lowest since 2020. What else do we have? That's most of the big stuff there. I mean, you've got the Hollywood strike is over. Of course, you got the automotive strike still, which is looming. But there is a lot of really good economic data out there. So I'm kind of being a little bit cautious on my short position, even though, my experience, my gut tells me we are due for a black swan event, guys. I really think we're ready for a black swan event. What will be the trigger? That's the thing about black swans, is you just never know. And I'm hoping, just like back in 2020, I was very fortunate. One of the guests I had on Power Trading Radio back in 2020, we did a show called How to Prepare for a Black Swan Event. And right after his show, I was thinking about it. I went home. The next day, I bought some deep out of the money put options on the S&P. And a week later, COVID hit. And the markets were lock limit down, day after day after day. Probably one of the best short-term, I was only in that trade probably 2 or 3 weeks. One of the best rate of return trades I think I've ever had. But that was just kind of came out of nowhere. And I think that it just feels like as time goes by in markets, we're ready, we're due for one of those. People talking about panic and fear in the markets. What's one way to measure that? A lot of people like to look at the VIX, right? Well, if you look at the VIX right now, which is the volatility index, it looks like it's surged dramatically. Well, grand scheme of things, this is nothing. There's no fear here. This is it. I mean, this is the bottom. I mean, under 20 is considered a time when you should be selling your positions because you're bullish. When VIX is low, time to go. Then there's really should be no panic at this point. So I'm not in the camp yet that we have had that capitulation climactic panic moment, but I think it'll come when we least expect it, as it typically does. Now I'm going to move up the list here and go to the S&P. The S&P today, I have had this little yellow box on my screen for quite some time, and this is an area where I did sell some puts on the S&P yesterday, really close to at the money because the premium was great, and I just felt like there'd be a bounce here on the S&P. Now, if I'm wrong, I'm going to have to do some damage control because I went a little bit closer than I normally do to get a higher rate of return. I was almost 2% for 3 weeks, which is pretty darn good. But today I was helped out by a nice little pop up in the S&P. At one point we hit 4304. So we broke above the 4300 mark, but closed below it at 4297. Now, all in all, this is not a great picture, but it is the sign that there might be a potential bounce here. I don't know if we're going to go that high. You look, we were up 33 points a day on the S&P. If we get back up to, let's say, 4350, that's a pretty logical target spot for me, in my opinion. Do we get to 4370? Fine if we do, but it just doesn't feel like it's going to be a huge bounce, just a small one here to the upside. Let's see, what else do we got going on? We had the NASDAQ, was your big daddy today. Funny, we had a downgrade on Apple. I forget the fund that next era or next stat or next something. It wasn't a really big firm, but Apple got downgraded today, and started off pretty weak and then rallied up. And that was one of the reasons we saw this NASDAQ do what it did, up 1.42%, double the rate of return of the S&P today, which is a great sign for anybody who's holding tech. And we've been focusing on this red horizontal line here, which is at 14,609 on the NASDAQ 100 futures. It's been holding that. However, remember, the more that this hits this line, the more likely it's going to break down. It's just chipping away at whatever buying pressure is lining up here and holding it at that point. It's like Braveheart. Hold at a certain point. If the enemy forces, or in this case, the selling pressure is just too big, it's going to rip right through that. So keep your eye on that one. I liked that it bounced today on the NASDAQ 100 off that 14,609 mark. But, does it rally up to this downtrending line we have at the top? I don't think so. But only time will tell. I don't know. The old dead cat bounce. Lori says, Merlin, are you going to buy some out of the money puts just in case? No, not me. Not going to do it. I could, but probably not. And finally, the best performer, Bitcoin, 1.42% for B to the T to the C today. There were some other big movers in the crypto space. I'll go and just kind of sort here so you can see some of those bad boys. Avalanche, Chainlink, two that are in my portfolio. Avalanche having a nice pop, about 6.6%, but in the grand scheme of things, it's still pretty darn ugly. As far as the losers go, you had some nothing too big on the losing side. A little late for a downgrade? Yeah. Well, let's look at... it's always entertaining when you look at the downgrades and upgrades that happen by these firms. And we had a high price on Apple going back into August of right around $196. We fell all the way down to $176, and now they're saying that the valuations are too high. Well, what about when it was $190? Now you're giving it to us? Come on. A little bit late there. I'm on mine are on the SPY, Lisa. So I sold puts on the SPY. I don't have the strike in front of me, but it was pretty close to at the money. Does crypto react more to news versus equities? In my opinion, yes. And the reason that I think it reacts more to news than the equities is the equities are much more diverse, saturated market, right? If you just think real quickly about all of your friends, everybody you know, how many of those people are invested in stocks or mutual funds versus how many of those are invested in crypto? It moves more to news. And again, if you have 100 friends that are all invested in the stock market, maybe 10 of those are actually really active or buying crypto. So because you have a smaller pool of people that are distributing the liquidity, it's going to have much more volatile moves. And we see that, right? It seems like every day you get 5, 10, 15% moves in some cryptocurrency out there. That's predominantly why. Is this you don't have distribution of all the buyers and sellers, right? It's kind of a niche market right now, and hopefully we'll get that changed going forward, and as we get more adoption, which I'm hopeful for, we'll start to see things, at least the percentage moves, start to slow down on some of these. When you look at these shit coins, these meme coins that serve no purpose and have no utility, they'll always have wild fluctuations because they're driven by speculation. If you look at something like Bitcoin, over time, Bitcoin's volatility will diminish because more people are going to start to use it more and more and more, and therefore the volatility will drop down. Oh, I've got better than a Wi-Fi extender. I've got an incredible router right here. I just wasn't connected to it. For some reason, it was connected to a different one, so I'll change my settings after the show today. Okay, so Lisa says, surprised that you haven't spoken about the Sam Bankman-Fried trial. Well, not really much to say there other than I am watching parts of it. It's going to be a soap opera that goes on for a long time. I don't know all of the intimate details of what happened. Do I think it was a fraud? I actually have to say no. I don't think that FTX was a fraud. I don't think FTX was a fraud. I think FTX was a legitimate business that was doing some shady things. It was an exchange. There was activity. There was trading. There was legit businesses there. There were some things that I think that they were doing that were shady and potentially illegal. But was the overall business of FTX a fraud? I don't believe so. I think that some of the things they were doing were rather novel because it's a new industry. And therefore, people just didn't know what they were doing. Now, did they do some shady practices with things like Solana and 3 Arrows Capital and some other companies? Yes. Did Sam Bankman-Fried send money around and pay his parents a ridiculous salary for doing nothing for the company? Yes. So I don't know. I think that there's arguments that he should get busted for some things, but is FTX overall a fraud? I don't believe that FTX was a fraud. It's kind of like saying Celsius and Voyager were a fraud. Well, they're not a fraud. Their business model was flawed. It's a different F. Fraud and flawed are two totally different things. So, oh man. Now, yeah, Margaret says how embarrassing for his father. How about his mother too? Right? Both of them. Get rid of them. Yeah, bad. Bad. I would be very embarrassed if that was my kid. But I'll be honest, it sounds like his parents were in on it. Like his parents were actually helping out with the legal side of things, saying, oh, don't do this. And if you look at what he did to grease the palms of politicians, if what I read was correct, Sam Bankman-Fried was the second largest donor to Joe Biden's individual donor to Joe Biden's campaign. That's monstrous numbers that we're talking about there. And of course, he greased the pockets of many different politicians. So when it comes down to it, it would not surprise me to see a request of leniency or something come down from up above from some of these senators or president who has received money from them, which honestly should be clawed back. Any penny that they receive from Sam Bankman-Fried should be given back, which a lot of them are not going to give it back. I think that we will see probably some leniency mandated from the higher ups to say, hey, go to the judge and say, yeah, well, we know he was proven guilty or whatever. Instead of giving him 115 years, let's give him 1 year with community service. He's a good kid. I don't know. We'll have to wait and see how it all pans out. But yeah, that's the drama that we're going to have to deal with going forward. And I'll keep you updated when big stuff happens, but I don't see anything that's really that noteworthy. Farah Kamaro says, what's the difference between bigger time frames and low time frames in trading Medic Man Downey? Oh, I thought you're saying you're asking Medic Man Down. Well, look, you should always start big picture. Look at the weeklies, the monthlies, the dailies as my high time frame, and you get your sense as to where things are going off the high time frame, which is why when I do this show, you guys generally see me start with a daily time frame. Now, if I'm going to look at something like, let's go to XLU, right? Our utilities that I sold a bunch of puts on yesterday. If I'm going to look at this and say, well, what do I want to buy in? Well, I got to know I'm going against the trend because we're an overall downtrend on the big time frame. That's the important one. Bigger time frame is way more powerful. But I can start to look at these lower time frames and maybe refine my decision and see, is there a point in here where I want to be a buyer? Look at this hammer right here on this 60-minute time frame. Buying above the break of that hammer would have been probably the best buy point you could have gotten. Could I have gone into 15-minute and whittled down even more? Sure, I can be more precise and more detailed if I want as far as execution. But in my opinion, you should always start big time frame and work your way down to the smaller one. And if they all line up, which is one of the kind of cool things about Jerry Baldwin's setup when he's on the show is he's looking for all of those to line up. And when they all do line up, you get this synergy of perfection in his mind where it all works and go with that trade. It's just decision support and validation. All right, let's see. Let me go through here. Okay, Farad, I got your question, bud. You sent that thing in, 50 times? So calm down, bud. Calm down. Let's see. They got approval to sell a ton of Bitcoin, and they won't. It's Greg. It's not just Bitcoin. It's actually Bitcoin is their smallest position. They had over 1.4 billion worth of Solana, then like $500 million of the Bitcoin. So there's a lot of other stuff there that's big holdings, and they did get approval to sell it. But if you look at Solana, take a peek at what's been going on with Solana. I mean, it's actually been doing pretty good. In full disclosure, I am long Solana. I have a bunch of it, but here's Solana. Go back to your daily. There's been so much talk about FTX selling off its Solana Holdings, which is over $1 billion worth. Well, if this is what it looks like when they're selling, I hope they keep selling because it's moved from $17 to 24. I'll take that kind of increase. Just keep on going. What else do I got? Lisa said, I thought I heard he played both political sides. Yes, he did. Yep. Which is why he's going to get out of this. I think he's going to get out of it. I think he's going to get off on this somehow, some technicality, because again, you got Democrats and Republicans, which he's been pumping money into, are going to help him out and bail him out, which shouldn't happen. It shouldn't have. The court system should be fair and just, and punish him. Tom says, so much of Bitcoin is hodl or loss. It should be more stable. Who is the market makers when Bitcoin drops a couple $1,000 and coins are bought? That's the big challenge is, if I've got 20 million in circulation right now, and I could take some time and look and see how many are actually on an exchange versus how many are in cold storage or in wallets, it's less than half, meaning less than 10 million are sitting on exchanges somewhere. So when all of a sudden the markets panic and people start to sell, it's not people like me, because I'm a hodler, I don't care. If Bitcoin goes down, great, let it drop. Not worried about it. If it's an institution and they're forced to sell, they have to have those on an exchange or find a relationship where they can actually sell them to someone and therefore that individual buys them. That's typically going to happen on an exchange where you have liquidity. So you have anybody who's actively buying and selling is buying and selling out of a much smaller pool, right? A hodler, HODLER. So that's the big challenge I see with crypto right now, at least with Bitcoin right now, is you have so many hodlers who are holding on for dear life is what it is. The term anyway is supposed to mean that. And the people who want to buy are buying from a much smaller pool. So when BlackRock, when Fidelity, when ARK Fund gets approved for their Bitcoin ETF, they're going to have to buy from somewhere. And that's been my argument why I think that you're going to see a huge surge in the price of Bitcoin once we get an approved spot Bitcoin ETF, because they have to hold physical Bitcoin. Where are they going to get it? They're not holding mine. Mine's right here. Mine's on my little nano ledger, so I'm not worried about that. Of course, I don't have 600,000 Bitcoin. I wish I did, but they're gonna have to find it somewhere. And you're right, Tom. It's coming from a smaller pool of liquidity, typically off of exchanges. So that's gonna create a lot of volatility. But where I'm saying volatility will decrease is over the next decade. More people, even some of you who are naysayers right now, will be holding some Bitcoin on a wallet because you'll start to see more places accept it, or using a software like Strike, the Strike app. You can go and pay instantaneous using Bitcoin. So it'll start to just slowly work its way into society. I don't understand how to buy Sol. So Sol is not a stock. Solana is a cryptocurrency, so you won't be able to buy it on an exchange like you would your Apple or E-Trade. You have to go to a crypto exchange and buy it that way. Yeah, Sol is not a stock. That's gonna be a challenge for a lot of people when you bring up Sol. Right, here's your this is the market cap of solar. Yeah, well, yeah, you can't buy that anyway. But no, this is Solana. And typically cryptos are quoted in pairs, guys. You see SOL USDT, so this is Solana versus the US dollar tether. And there you can see right around 23 bucks right now. All right, let me see. There was a comment here. Merlin, what do you know about Trade with the Pros, headed by Rick Meadows? They're putting out a lot of ads and 2-hour free seminars. Yeah, they're trying to copy what OTA did. It's some of the people that have left OTA. Yeah, that's all I'll say about that. Do your own research, and they're just trying to duplicate OTA. And thanks, Greg, for the comment about the article. I understand. Could only see big manipulators sell at low price only to buy back more. And that's a problem, right? When you have big influencers with billions of dollars, they can manipulate price. They can release headlines. They can do all sorts of things to manipulate price, which is why it's been much easier for me to just sit back, put my crypto on a nano ledger here, and I'm not worried about it. As I told you, my target is November of 2025. Then I will sell all of it, most likely. If the pattern follows through with what I think is going to happen, I'll sell every single bit of cryptocurrency, all of it, 100%. And over the next year, it'll fall into 2026, and then I will take everything and buy back in an even bigger amount of cryptocurrency and get ready for the next 4-year cycle. So Manatee, there's actually a video I made for barchart.com. And in that video, I'll see if I can bring it up for you real quick. In that video, I detail what I think is called the 4-year cycle. And it's something that I've just found in the markets that I like. I think it's a repetitive pattern. So therefore, when I see that happen, I'm going to act on it again. And it's this 4-year cycle that happens. I will post into chat here real quick. Sorry, you're probably going to hear my audio pop in here. There we go. And here you go. So watch this one at your leisure, Manatee, and then we can discuss it another time. But that's the video that I created for that one. All right, let me go. I have other questions I need to get to. Before I do that, I always like to show kind of fun things, I guess, different parts of the market that I think are interesting, and I like to call that the chart of the day. Well, or chart of the week, excuse me. I used to do this session with Tilly, but this is what I'm going to call the chart of the week. The chart of the week is consumer spending. And I want you to look at this one closely because notice it goes in vertical 2019, 20, 21, 22, 23. 2019, everything was fine. Look at our spending over here. 7%, right? This is, normal. And then COVID hits and our spending when we were in lockdown, all of a sudden went to negative 10%. Then it started to creep up again. We started getting stimulus checks and all of a sudden, look at the spending. It just shot up to 34% by April of 2021. Huge spending. And gee, I wonder where our markets were surging because people were just buying and buying. This free money coming in, non-repay. You don't have to repay any of these loans, etc. But what's interesting is what's happening right now. Going all the way back into October of 2022, we've been negative, which means they're spending less and less. And I'm a big fan of the trend is your friend until the bend at the end. Notice the trend here as we go down. It's getting bigger and bigger and bigger, which means that there's a serious decline going on in consumer spending. This is from Citigroup Research, which I love. It says right here, no redistribution without Citigroup's written permission. Well, I got it off Twitter, so I can get it there. But I think it's kind of interesting to see spending declining like that. It's not a good sign. And when we look at these markets and people are concerned about, well, what's going to be that next catalyst that drops these markets lower? Well, spending is certainly going to be a big portion of that. And if we go back into last year, spending was positive. Now all of a sudden we're seeing negative, and look what's happened to our market. So if this is a trend that is going to continue, I think that this is going to be a very important thing to watch, which we normally don't spend that much time focusing on, but that's why I decided let's do a little bit of a chart of the week will be consumer spending. All right, what else do we got? We are spending less and less, but the interest rate keeps increasing. Something's up. Well, and just keep spending less. Just keep spending less, guys. The less you spend, the better off you're going to be in a financial position. And yes, does it hurt the economy? Does it hurt businesses? Yeah. But at this point, you kind of got to be thinking about yourself here and how are you going to benefit or prosper in this environment. My philosophy would be keep your money. Keep as much of it as you can. Don't spend. Yeah. I mean, you're going to have to spend on things, obviously, but don't go overboard. Do you think that a black swan event would affect Bitcoin? Yeah, it depends on what that black swan event is, but certainly, I mean, it depends on how badly people need capital. There's a lot of money tied up in Bitcoin, so if people have money locked in there and they need it for something else, you might see selling pressure there. If the black swan event is tied to a default of government debt or inflation issues, it could be a big surge for Bitcoin as people are looking for a safe haven to put their money. We talk about Argentina and how their inflation rate's I think it's over 100% now. if I'm Argentinian citizen, the day I get paid, I'm buying as much Bitcoin as I can because Bitcoin is going to at least hold its value to some extent versus my Argentinian currency, which is going down and down and down and down. All right, let me go to these questions. As I mentioned, I was going to read questions for you. Les sent this one in. What time we got? Holy cow, I'm not going to make it through all this today, but we'll make it work. He says, tomorrow we have unemployment claims report. What side should I be rooting for? It's an interesting perspective. He says, should I cheer for higher unemployment or lower unemployment numbers? Tough one. Well, which side do we want to be on? Well, let me bring up a chart of the unemployment data here so we can see this and just get the trends. One sec as I bring up Forex Factory. And that's where I'm going to pull up that data. We'll go to the calendar here so we can like tomorrow's data. Right, so today you had, actually had Jolt job openings yesterday. Today you had ADP non-farm employment change. And this is another factor I think that made these markets kind of freak out a little bit today is the decline that we're seeing. Right, this is non-farm employment change, meaning the creation of new jobs. And it was at 180,000. They thought it dropped to 154. We actually came out at 89,000. That is significantly worse than expected, which in my mind signals a weakening economy. It means that employers are no longer looking at expanding. They're actually saying, well, let's not hire right now because things are getting a little bit tough. Now, tomorrow, on Thursday, you have the typical numbers that come out every week, which is going to be your unemployment claims. And I don't put as much emphasis on that. I don't really care so much about the unemployment claims, although we are seeing them drop. The only way it gets really dramatic is if you go all the way back pre-COVID, right? You're like, holy cow. Where were we pre-COVID? You know, our numbers were right around 210, 230, 211, and right now we're right around the same. So I don't think that this is anything to worry about for tomorrow. I'm not worried about this one at all. If anything, it's that ADP non-farm employment change for today or Friday's unemployment rate, which I'll scroll down here so you guys can see. On Friday, they're expecting right now our unemployment rate to increase. Oh, sorry, no. Decrease from 3.8 to 3.7. I found that interesting because I think we're going to be going up on unemployment rate here, but yeah, apparently they think we're going to be going down. So as far as which side to be on here, I agree with Big Ebs. Higher unemployment will signal to the Fed that it's working. Remember, the Fed doesn't want unemployment, but higher unemployment will be a result of constricting the economy, slowing down prices, taking money out, making money more expensive, and therefore inflation is declining. With those factors in place, the Fed can say, okay, we're doing our job. The side effect of fighting inflation for the Fed is higher unemployment. So they kind of want to see that as a result. And we haven't really seen it. It's been a slight increase. I'll show you the unemployment rate here. Let's go after the whole COVID drop, and let's just look at the past little bit. So, you know, we are seeing it tick up a little bit. The previous reading was 3.8%, which is the highest it's been since early 2022. But still historically really low. Very, very, very low. All right, let's see. If Apple nosedives, that will be the Black Swan event. Unlikely. Yeah, I don't think that will be it. Well, I don't think Apple knows that. I do think Apple is going to show some weakness and sell off a little bit here just because, you know, I look at the iPhone 15. I'm like, why on earth would you buy that? I mean, there's nothing really special about it. Like, ooh, it's titanium. Who cares? I have a phone case on. You're telling me that your major marketing piece is it's titanium. I have a titanium phone? Let's be honest. Does anybody here bareback their phone? You got a naked phone? I'm pretty sure everybody's got a case, right? Because I got butterfingers. I drop my phone all the time. I don't care if it's titanium. Mine's gold. I've got a gold phone. Not real gold, but gold color. I don't care. I'll never see it. So why would I buy a new iPhone? Save your money. Margaret says, you do want a better camera. I do want a better camera. Well, actually, I like this camera. I want multiple cameras so I can do more panel discussions here in my studio and maybe fix up my studio a little bit, but we'll get there someday. All right, that was Les's question. Let me go to another one. Okay, as you guys know, this is not, whatever I do here is not financial advice. I'm typically telling you about my portfolio, my positions. Do with it what you want. You have to have risk management. You know, I mentioned XLU, and a couple people emailed me, hey, I bought XLU. That's on you. You got to be careful with that because XLU, that's catching a falling knife. There is the possibility that XLU could continue to go lower, so make sure you have your plan in place. I have mine in place, so if I'm wrong, I'll lock in and take some losses on that, but make sure you have a plan in place as well. So let's go to some market commentary. Mike L says Schwab is down and closed below the Bollinger Bands Tuesday. Is the demand zone it is in decent enough to take a trial option position? Well, let's go look at Charles Schwab. As you guys might remember, I wrote an article a couple weeks back talking about more pain ahead for the banking sector. I still feel that is true. I think as this economy might slow down, the good news is for banks, the yields are rising significantly on the long term, which is going to help them out quite a bit. But they'd have to buy new bonds. Right now, if I look at Charles Schwab, I don't know if I would say that this is actually in a real strong demand zone. I think personally we went past it. If I'm going to use my numbers, we did go past it a little bit. I do see some unfilled gaps here, so I personally probably wouldn't go into Schwab until we got down to the 48, maybe the 47 mark. Probably the 48 just to get in there near these bottoms. So, if you're looking at Charles Schwab right now, Mike, and it's trading at 51 and a quarter, I might look tomorrow at how much premium can I get for selling the 48s. Right? If I get enough premium, all right, maybe I'm a buyer of Charles Schwab at those levels. Being outside the lower Bollinger Band, that doesn't necessarily mean buy point either. If it was in a stronger demand zone, I would say I'd be interested, but right now I'm not. Just not that interested in it right now. And then the second part to his question, which is a very similar one, was SEDJ, one of Larry's wealth portfolio stocks, is also traveling down the lower Bollinger. Any thoughts on the demand zone it is in? When I looked at that one, I didn't even think it was in one. So let's go SEDG. This has been a bloodbath for this bad boy. Solar Edge looking real ugly. Again, this is one of those things where if you're asking me what to do here, I'd say short the rallies. This is a downtrend for whatever reason. I don't know Solar Edge, but let's go out. I'm going to put a line right where we are today and see where it lines up. Is it in fact in a demand zone or near one? So I'll zoom in to this part right here. And, personally, I don't know. It did have a gap up from this level. It goes back to May of 2000, May 15th of 2000. Not bad. But there isn't any, I don't see any demand zones on here that I think are really strong. The one that attracts me the most is probably going to be right around 91.72. You've got another guy right down here, right around $76. I would probably just wait on this one and let it keep on dropping. And I know it's probably not what you wanted to hear, Mike, but I'm speculative about buying things, companies I'm not that sure about. Especially in demand zones that aren't that strong. So I personally would probably just shy away from it. I don't think that's strong enough to make me want to buy. But again, I'm not the one making the trade, right? Every time you pull a finger, you've got to make sure that you are comfortable with whatever risk that security entails. This one, it still looks pretty weak to me. I haven't seen anything on this chart, at least over the past 2 months, that shows strength. It's just been nothing but weakness. Today is your only real sign of strength you've had. So, maybe it bounces from here. At this point, I would still shy away from it. So, no, the Schwab one I would be more interested in selling some puts at those lower levels, collecting some premium, and maybe getting a hold of it at $48. But that's me. No problem, Mike. Happy to help. Or at least offer some different insights. All right, here's a great question. I think that there might be a misunderstanding on the way that bonds work. So when we say that the 3-month T-bills are paying 5.3%, I think that some people believe that if you held those for 3 months, you'd earn 5.3% for 3 months. No, that's not the way that it works. It's 5.3% annualized. So if you were to hold those 3-month Treasury bills, you're not getting 5.3%. You are getting, let's go do a calculation here. So it's 5.3% divided by 12. So you're getting 0.44% per month. So if you held that for 3 months, you're going to get yourself 1.3% rate of return on your investment, right? It's just like if I was to hold the 10-year bond and we say, oh, well, the 10-year is going to pay us, let's just say 5%. It's a little bit higher than what it's at, but let's say the 10-year pays us 5%. You don't get 5% for the entire 10 years. You get 5% per year for 10 years. So just wanted to clarify that one. Because it's a great question what he wrote, and I could tell right away that there was just a little misunderstanding there. Mike says, I noticed the 3-month Treasury bill rate is around 5.3%. Is this something that normal retail traders can buy into? If so, how? And why wouldn't people continue to collect roughly 5% every 3 months and then do it again? So yeah, I think I've answered your question. It's 5.3% for the year. And then what's important to understand here is you can buy these. You can go to Treasury Direct and buy them directly from the Treasury Department. Yeah, you can absolutely do those. And you can continue to buy those month after month after month after month after month. It's very easy to do. All right, what did I see? Apple is a subscription company. It won't go black. I agree. Plus, I hear they are going to release the best phone ever next year and the next year. Yeah, I don't think they're going to black swan. Do I think that their valuations decline a little bit? Yeah, I think Apple is going to slow down its growth. Let's bring up the Apple chart here, and I think we're already seeing that on this price chart. Now, if we go back into a normal level, right? Let's just say it goes back to its 200 period moving average. So let's go through I don't have moving averages on here. Let me take this off. Actually, let me take the ATR off, and we'll add on Bollinger Band just to have that one on there. Let's go Bollinger. No, we wanted moving average. Moving averages, and I'll go simple. I prefer simple when I look at long distance. I know some of you guys might like the exponential. And let's go to settings. I'm going to change this to a 200 period moving average just to see long term. Like where would be a logical retracement point for Apple at this point? Well, we're actually pretty darn close to its 200 period moving average. If you look at the price over the past 200 bars, that's what this is establishing. We're pretty darn close to it. So we're I actually thought we'd be much higher than where we are relative to its current levels. So I think Apple has some way to go down to get back to a little bit out of the clouds, as it will. And I think that's why it was downgraded today. And you look at some of the valuations, it's still pretty high, especially that they're not really recreating the wheel. They're not really creating anything that's amazingly different at this moment in time. All right, let's see. What else do I got? That worked, but I don't see any volume. I understand, and even this market is over. Which part are you asking about there, Michael? I put Sol USA and Sol. So it depends on what platform you're looking at. Depending on your platform, you may not have access to cryptocurrencies, right? What I'm looking at here is TradingView, and TradingView allows you to look at crypto. So if you're ever curious, you just start typing any letter. So let's say you want to look up Solana, you would just go over to crypto and go SOL. And there you see Solana versus a whole bunch of different stuff. Now, there's a lot of different guidelines here, but typically you want the one that's going to be the most liquid. Right now, that is going to be on Binance. So you would just click on the Binance one, and now you get the chart of Sol versus Tether, right? So basically Sol versus stablecoin. What else do I got here? I had one other question. Okay, so this might actually be Swazi. Is Swazi Pat? Is that you? What are your thoughts on natural gas? It smacked $3 twice already and a third time back in March. Looking to take it on a break above $3 range with a stop under 260. Target is high as 470, but take the quarter off the table and round into 360 if it gets there. Okay, so let's look at NatG. I could do a couple things. I could look at natural gas and I could look at UNG, but here's your chart for it. Let's get that moving average off. What's great about natural gas right now is it's no longer suffering those colossal sell-offs, right? You're not seeing anything just crush it like it did back here. This was just brutal as it dropped from $7 down into the 2 range. What's noteworthy? The trend. It's not dramatic, but it's higher highs, it's higher lows, and it's drifting higher. So I think if you get a close above $3, I think you're probably right in the assumption that you'll see it move higher. Now, one thing that's interesting to look at with natural gas is some of the seasonality of it. So let's go monthly. Actually, let me go weekly here. Make it a little bit easier for me. Let's go weekly. How much time we got left? Oh, another hour show today. Damn you guys. If you look at historical stuff, it typically seems like it surges in the later parts of the year, like September and October. Now, we didn't get that last year, right? September actually was a brutal month to the downside. Let's go to the year before. September started a rally, sold off a little bit, but then in November and December really started a big rally. Go back to 2021. Similar picture, right? You had rallies going into September and October. So I do think you're probably okay making that trade on natural gas. Now, I'd love to have John Rowland on to talk about it because he is my resident guru on natural gas, and he's a pretty busy guy, but I'll see if I can bring him back on. If you take that trade, just be careful. Natural gas is extremely volatile. I do think going back into the winter months, you're going to see natural gas surge in price. I do think you'll see it move up, but that's just my perspective of it. Lisa says natural gas is used for heating too. Right, and that's why in winter months, in the colder months, you see a bit more consumption of it. So I'm fine going long natural gas. I like that it's stabilized. I like that the trend is slowly up. I don't think you're going to see, when it breaks this $3, I don't think you're going to see like just a straight surge up. I think if anything, this trend will continue, maybe get a little bit steeper based off whatever the seasonal demand is for natural gas. But again, I'm not a natural gas expert, so I'm not looking at inventories and things like that. John Rowland is definitely much more of an expert in that area than I am. All right, I think I've almost got all the questions. All right, I got 12 minutes left. Let me read what you guys put here. Can natural gas stay at the top after breaking out of 300? Yes, I think if it breaks above 3 and closes above 3, then I think you're probably fine owning it and holding on for that one. Greg says, what sinking economies desperately sell U.S. assets to revive themselves, or are foreign governments mainly in FX dollar? That's a much more macroeconomic question. What sinking economies desperately sell U.S. assets? It's not necessarily that they're selling U.S. assets because they're sinking. They're selling U.S. assets because maybe they need to put themselves in other assets, which are going to get maybe more safety, a better rate of return, better yield, and things like that. We talked about the carry trade where people are, looking to buy the 10-year bond because the yield is so high. So we're seeing the yields, you should actually be seeing demand increase for 10 years, thus pushing the yield down, but we're not seeing that at this point because the government is selling so much of it, it's flooding the market. So that's the big challenge we have with that 10-year is you're fighting the Treasury Department, which has to sell more and more and more just to fund our debt. And that is not going to change anytime soon. What do you think on the ETF for natural gas like UNG? Fine. The one problem with UNG is it's a futures product. So you notice that there's no real trend up, right? We just looked on that daily time frame and it was a nice uptrend, right? You're not seeing that here. You're seeing sideways. The reason for that is UNG is rolling contracts. So when it gets near the front month, it's got to buy the next month. And when it does that, it's buying them at a higher price. So it's not getting all of the gains of natural gas because it's going to have, you have backwardation, you have contango, depending on which way it's going, which way the prices are going, and that's going to cause problems for the price of UNG. So right now, it doesn't look that great. It looks like just sideways action. So if you're thinking about buying UNG, you better think about a strong move up or down in natural gas. If you're looking to buy it, you want a strong move up, but it's going to have to be pretty darn strong. If you are shorter term, I would say you're better off trading the natural gas futures than buying UNG. Yeah, you can always trade Boyle. If you like juggling chainsaws, right? There's your double long natural gas. And notice that natural gas is actually moving up. So this is an interesting thing. Natural gas has been trending up. You guys can see it there. This whole chart, natural gas has been trending up. That's the futures product. If I look at UNG, trending sideways. If I look at Boyle, it's trending sideways to down, particularly over the past 2 months. So I wouldn't touch Boyle unless you're a very short-term trader. So be very careful with that one. What else? I think I got it covered. All right, I'm going to wrap up here because I got too many things. Let me just tell you what's going to happen tomorrow. So tomorrow we're going to have Bill Addis on the program, talking bonds. Feel free to email me, TraderMerlin@gmail.com, if you have any questions you want asked for tomorrow's show, or put them down below any of the YouTube videos. Tomorrow's show will be as close to 30 minutes as I could possibly make it because I have to open up another room. I'm teaching a crypto thing for Online Trading Academy tomorrow, and I have to open up the room. So I'm going to target being done at exactly 2:30 Pacific time tomorrow. It might be a couple minutes after that, but don't be surprised and I abruptly call an end to it and be like, all right, guys, I'm going to have to cut this show because I need to go open this room and do this class for OTA. So we'll have Bill Addis on the program tomorrow. Should be a lot of fun. I'm curious to see what his thoughts are on the rate hikes and what the potential Fed actions might be going forward. We already covered your economic calendar, but I will dive into that real quickly again for tomorrow. Let's get rid of this unemployment for Friday and look at your Thursday calendar. You do have unemployment claims, which we talked about, challenger job cuts, and trade balance data. Conveniently, we have natural gas storage as well. Now we're seeing some of the inventories for crude oil get a little bit better. Wonder what happens there with our natural gas. It looks they're expecting it to increase by 7 billion, cubic feet? I forget how they calculate all that stuff out, but Tom says chainsaws require 3x to run properly. Yeah, those ones are nuts. But Boyle can be a home wrecker if you're on the wrong side of that thing. That's it for tomorrow. Earnings-wise, there was nothing really that key, but I will bring it up for you anyway, just so we can look at that one, and I can wrap up here and know in peace of mind I covered all the important stuff for tomorrow's trading session. So here is what's going on for tomorrow on the earnings calendar. Oh yeah, Constellation Brands, which I do like. I'm a fan of Constellation Brands. They are the owners of the best-selling beer in the world. Kind of hard not to like that. Lamb Weston, Conagra Brands, Levi Strauss also reporting earnings tomorrow. Rite Aid. It's funny, I didn't realize that Rite Aid was so small. Rite Aid literally has a market capitalization of $27 million. That seems just crazy to me. It's that tiny? Like, that is, why even bother? Anyway, that is your economic calendar, your earnings calendar for tomorrow. Again, you guys can send in any questions that you have. You have to contact Online Trading Academy. I don't know if it's a special event or not, Michael. But it's a cryptocurrency event for tomorrow. All right, guys, that's going to do it for me. I hope you enjoyed it. I hope you learned something. It's going to be a wild remainder of this week. I think that right now, looks to me like you're going to see an update in the markets tomorrow. I will let you know on tomorrow's show. I'm pretty sure I'm either going to close out all of my rut short or the half of my second portion here, which gets me down to 25% of my overall position. But just feels like the market wants to pop tomorrow. We'll see how it all pans out. All right, everybody, thank you so much. For those of you who might be new, hit that subscribe button, hit the like button if you enjoyed it, share with your friends. So hopefully I grow my viewer base here, and I will see you guys tomorrow. Take care.